So we've been talking a lot about industries and stocks that have been hit really hard here in recent weeks on the channel, but not every stock and industry out there is suffering from this global issue. In fact, some big companies out there are holding their ground here during these tough times and during this market crash. And I want to spend some time today to acknowledge them and to talk about them and to kind of figure out if these are good investments. One thing to note is that I think that all three of these stocks are holding up quite well right now, because they are all seen as essential companies. At least that's what consumers believe, which is why I think they're going to have a phenomenal 2020. But on the flip side, once things do go back to normal and pretty much every business opens up again, I don't think that these stocks will have as much recovery or upside to them as some of the other stocks that have been beaten down quite significantly. A lot of investors that may have their money right now in these safe stocks may rotate their money out of those stocks into the stocks that are starting to recover. And we may actually see some of these safer companies start to drop as the rest of the market starts to go back up. So that's a risk. Keep that in mind. But either way, I want to discuss these companies today because I think that at least in the short term, these look like great investments. So guys, as always, hit that like button down below to support the channel. And if you're brand new here, hit that subscribe button and hit that bell notification beside it so that you're notified every single time I release a brand new video. Okay, so everyone's stuck at home right now pretty much all day. And a lot of people resort to things like video games. So a lot of video game companies are benefiting from this whole work from home, hashtag stay at home and all of that. So companies like Electronic Arts, Take-Two, and Activision Blizzard are actually benefiting right now. Now, I chose Activision Blizzard as I believe this is a strong and solid business because they have a strong presence in gaming, both on mobile and on consoles. And they're positioned well, in my opinion, to succeed here. I also believe this company is providing the best value, and we'll go through some of that shortly. Activision is the maker of big games like Call of Duty, World of Warcraft on consoles and on PC, and the ever-popular Candy Crush for mobile games on Android and iOS. They have a strong library of games and continue to build on that every single year, so even outside of this global issue, it's generally a good company to own. Activision is in a good financial position as they have a good amount of cash on their balance sheet at around $5.8 billion, with only around $1.8 billion in short-term debt and obligations, so I'm not too worried about this company suffering here. They are in a good financial position to even expand their teams and their company if required to develop games even quicker. In fact, this year, the estimate for Activision should come in pretty much on par or even beat what analysts expect here for EPS growth. And this is a good sign, especially for Activision here, because over the last few years, the company has hit a bit of a rough patch, which is why their stock hasn't seen a whole lot of movement. They had a lot of restructuring and reorganization within the company, and this was because the company did experience some slowing growth. However, now they've been kind of given an opportunity here and they're positioned to once again benefit from things. You can see along with their earnings, they're supposed to start growing year over year, and their other metrics like revenue is expected to rebound from 2019. Fast forward to 2021, 2022, the estimates also look very strong for this company. Net income is also expected to come back much stronger, making this business even more profitable. So this whole issue right now may be one of the best catalysts for Activision Blizzard to get business back on track at a much quicker rate than expected. So here's the stock chart right now, and you can see that even though it hit its low and corrected 50% back in early 2019, it hasn't come back to those levels during this market crash. It has actually held up pretty well and held between the $50 to $60 range this whole time, showing a ton of strength when the market is in pure panic and sell-off mode. And based on the trends we're seeing right now, I wouldn't be surprised to see Activision as a $60 to $70 stock in the coming months once they release their numbers on how successful they have been in the last few months. It'll be interesting to see how the stock plays out through 2020, and who knows, maybe once things recover, this company can actually get its stock price back to previous highs. So now let's move on to our second stock here, which is in the food sector, because it doesn't matter if we're in a recession or not, we need to eat. I think that Domino's is in a very strong position to benefit from this current issue because, like I said, we need to eat, and in tough times, spending as little as possible on food becomes a priority for people. As a result, junk food and fast food usually hold up well during these times, and Domino's model has always been delivery, which fits in perfectly right now. Many customers who have never tried Domino's or typically go for walk-ins at Domino's are now going to be ordering delivery as they are in lockdown. This, in my opinion, will help the business continue chugging along and come out of 2020 as just another strong year overall. The one concern that I do see with Domino's with their competition is that food delivery apps like Uber Eats have picked up popularity recently as well, so Domino's is going to have some continued competition moving forward. Over the short term, this may not be much of an issue or impact. However, over the long term, this could be a serious risk as consumers look for options other than pizza. Once consumers start getting an income once again, once they start getting their jobs back, they may opt for more expensive options as opposed to just a cheap pizza. On the flip side, this may also help Domino's to acquire a whole bunch of new customers as well. So we'll have to wait and see how this really plays out. The assets and liabilities for now for this company is not bad. They are in good standing. If people stop ordering from them in the short term, they can still survive here, no problem. But the reality is that's not going to happen, and either way, they have $400 million in cash with around $150 million in short-term debt and obligations. And similar to Activision Blizzard, Domino's is expected to have a good year as well, with growth from 2019 in their EPS double digits across the board. And looking at their growth in other segments of the business, you can see that this business is just on fire. They keep posting double-digit growth for everything. Going into 2020, looking at the projected growth for this year, 2021, and even 2022, you wouldn't even realize that there's a lockdown going on right now because their numbers across the board look normal and healthy and in line with what their usual growth would have been anyways. So I think Domino's may actually come out and surprise us here this quarter as more people order pizza for delivery, but that's just speculation. We'll have to wait and see what they say on their earnings and make a judgment call from that point on if it's still a good stock to hold during these tough times. Now their chart here shows us that the stock did initially correct near 30% from its highs, but it got bought up soon after as investors found value in the company. It's a big range, but it does fluctuate between $280 to $380 here as the market tries to figure out how to price their business and if they will continue operating profitably in 2020. I would say Domino's is much more volatile than your typical food-related stock, but that's not a bad thing for long-term investors because their business is fundamentally still strong. So really on any weakness, this may be a good buy here, but I don't expect to be too many sell-offs in Domino's Pizza that don't get bought up fairly quick. Now our third company here just cannot be stopped. This is one of the most popular stocks in the stock market, one of the largest companies in the stock market, and they're benefiting incredibly right now from the whole stay-at-home movement. Of course, just because we're stuck at home, the urge or necessity to purchase products does not disappear. We still need to buy our regular supplies, maybe shampoo and toothbrushes and toothpaste, and we still want to pick up maybe some video games from Activision Blizzard. And we do all of this through Amazon without even having to leave our house. Now you all definitely know Amazon from a consumer standpoint, so I'm not going to spend some time here going through their e-commerce platform. But what you need to know is that there's a lot more to this business here. They have music, video, AWS, and all of these segments should see a big spike in usage and customers, in my opinion. What I also think could happen is that a lot of people that were just kind of, in the industry but not really certified on AWS may actually spend this time to get certified on AWS. And coming out of this global issue, we may actually have a ton of AWS certified individuals, which can help Amazon drive more growth going forward versus their competition. The company has a ton of cash, and although they have some short-term obligations, they're able to cover 100% of it no problem. But remember, this company is thriving right now in many aspects of their business, so I expect some good income for them here in 2020. Concerns about bankruptcy for Amazon is pretty much at 0% in my opinion during these times. Their earnings are expected to explode here in 2020 and expected to accelerate in the back half of 2020, but even the first half of this year should come in pretty strong. And their e-commerce business is on fire right now because they are hiring 100,000 new employees immediately to help with the uptick in demand. Competitors like Walmart are also doing the same, and this is a good thing because this will allow a few individuals who lost their jobs recently to pick up a new job, at least for the short term here, and earn some additional income. And in my opinion, I don't think this big spike in online shopping and just doing everything online will really go back to how it was before. I think that what we're seeing right now in the world is a fundamental change in how consumers shop. This is definitely going to set Amazon up for huge success as the world transitions to a more online delivery model versus a traditional in-store retail model for all their needs. Now the growth rate here has been absolutely amazing for this company. double digits and high double digits for their earnings, mainly because of AWS, which is a huge profit driver for the company. I don't expect this acceleration to slow down for a few years. As I said, I believe this is a fundamental shift in consumer and business spending that will help companies like Amazon, Microsoft, and even Google benefit from their massive cloud services. Looking at the next few year projections, I believe that Amazon will have no trouble hitting those estimated numbers, and in my opinion will probably exceed them quite significantly as well. Profits will continue to explode here, and they will just keep capturing more and more of the market in e-commerce and cloud. Now remember the days when Amazon stock was under $100 per share? Yeah, I don't think we'll ever see those days once again, at least not anytime soon. I was lucky enough to get the stock under that share price, and I've been holding my shares tightly during these tough times. The stock corrected 26% over the last couple of weeks, but quickly rebounded to nearly $2,000 a share, and even today is trading pretty close to its all-time high. This is despite the general market being down 25 to 30%. Investors know that Amazon will be just fine through this crash, and as a result, it's become one of the most popular safe stock for investors to invest in during these uncertain times. So I mean, these are just 3 out of many businesses that are going to be doing absolutely fine throughout this global issue and most likely recession that we're going through right now. They will continue growing, they will continue pulling in money, and they will continue operating like they were just before this issue hit us, and I think they'll come out as much stronger businesses after this as well. All 3 of these companies will benefit from new customers that they've acquired during these times, but the real question moving forward is, can they maintain these new customers, and can they convince to stick on their platform once things start to go back to normal? That's going to be the real driving factor for the next 10 years, let's say, for these stocks. But either way, I think that these companies right now are incredibly safe companies to invest in if you want to just have some mediocre returns here in the short term with potential upside once things start getting better. Guys, thank you so much for watching. Hope this video was informative, and I hope this was kind of a shift here in thinking of not every company out there, not every stock out there is suffering during these tough times. If you enjoyed this content, again, hit that like button down below and subscribe if you're brand new here. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.